Hello everyone. Welcome to yet another comprehensive session on goods and service tax filings. Today in this session we are going to see what is the annual return, that is GSTR-9, and why it is important for those who are registered under the GST. So today we are going to see how GSTR-9 is filed accurately and how the reconciliations are done so that the returns that have been filed during the year are in consonance with the final annual return for the relevant financial year. So before we proceed, let us quickly see what we did in our previous session. So in our previous session, we learned about the composition scheme of GST. Under this scheme, taxpayers whose turnover has not exceeded rupees 1.5 crores can opt to pay taxes at a fixed rate of 1%, 5% or 6% as the case may be. Also, we learned about the annual return that the composition dealers are required to file. So under the composition scheme, the dealer cannot raise a tax invoice and also cannot claim the input tax credits. Under the composition scheme, the taxpayer is required to pay a fixed percentage of GST on the turnover achieved during the quarter and shall file the return CMP-08 at the end of each quarter and GSTR-4 as the annual return at the end of the financial year. So now let us start with today's topic, that is annual return for regular taxpayers, that is GSTR-9. So in this session we are going to see what is GSTR-9, why is it important, and we will understand the structure, applicability, and what are the different tips to file the GSTR-9 correctly and accurately so as to avoid any notices or communications from the GST department. So let us proceed. What is GSTR-9? So GSTR-9 is an annual return to be filed by regular taxpayer registered under GST. GSTR-9 is required to be filed by those taxpayers whose turnover during the preceding financial year has exceeded rupees 2 crores. It consolidates the data from all the monthly or quarterly returns that has been filed by the taxpayer. Returns like GSTR-1, GSTR-3B that has been filed during the financial year are reconciled in the annual return. So annual return is a summary return and it is not meant for making any new claims. It is required to be filed under section 44 of the CGST Act and it captures the outward and inward supplies, input tax credits claimed, taxes paid and other adjustments made during the financial year. So what GSTR-9 does, it logs the data of the preceding financial year and any adjustment that are required to be made in the monthly returns which have not been made in the subsequent periods return are ultimately done in the annual return. So who should file GSTR-9? All the regular registered taxpayers are required to file GSTR-9, although it is optional for those whose turnover has not exceeded rupees 2 crores during the preceding financial year. Those who are not required to file GSTR-9 are CTP, that is casual taxable person, then NRTP, that is non-resident taxable person, then input service distributors, then TDS deductor under GST, TCS collector under GST, and those who are engaged in online information and data access and retrieval services. So these class of taxable person are not required to file GSTR-9. What are the due dates and late fee? The due date for filing of annual return is 31st December of the following financial year. So for the year ended 31st March 25, the due date will be 31st December 25. Late fee is rupees 200 per day, that is 100 rupees under CGST and 100 rupees under SGST per day. That will be subject to a maximum of 0.5% of the turnover in the state or union territory. So even if registration is cancelled during the year, GSTR 9 is still required to be filed if returns were filed under the regular scheme for any period during the year. Then what is the structure of GSTR 9? So part 1 contains the basic details. So table 1, 2, 3, it contains the basic details like GSTIN, legal name, trade name, etc. Then part 2 contains details related to outward supplies. In part 2, table 4 and 5 are included. Here in this table, details of outward supplies declared in GSTR 1 return is considered, and it also includes B2B supplies and B2C supplies along with nil rated, zero rated and exempted supplies made during the relevant financial year. Then part 3 contains input tax credit details. So tables 6, 7 and 8, these tables contains the details related to input tax credit. So what are the input tax credits availed from GSTR 3B? It gets auto populated, and also it contains the reversal and ineligible input tax credit details. Also ITC reconciliation with GSTR 2A and 2B is captured in table 6 to 8. Then in part 4, that is taxes paid, table 9 contains the details of taxes paid during the financial year. Tax liability and payment summary of relevant year is captured from GSTR 3B. Then part 5 contains transactions of previous year, that is table 10 to 14, it contains previous year tables that relates to amendments, credit notes, debit notes or any other information that are declared after the financial year but before the due date of filing of annual return. Then part 6 contains other information, that is table 15 to 19 contains other informations like demands, refunds, supplies from composition taxpayers and then HSN summaries. So we will have a quick look of each of the tables in the GSTR 9 return later on. So reconciliation essentials. Before proceeding to file the annual return, the taxpayer must ensure a proper reconciliation between GSTR 3B and GSTR 1, then reconciliation between books and GSTR 3B, again reconciliation between books and GSTR 2A or 2B that relates to input tax credit, and a reconciliation of taxes paid versus the tax payable, that is the tax liability, is a must. So GSTR 3B and GSTR 1 reconciliation is essential so that the taxable value as declared in both the returns are ensured to be in sync with each other. Also, the taxes payable as per GSTR 1 and GSTR 3B should match with each other. Then reconciliation between books versus GSTR 3B. So the total taxable value as declared in GSTR 3B and the total sale value as per the books must match across all months. Also, the tax liability as declared in GSTR 3B and books must match with each other. Then books versus GSTR 2A or 2B. So the input tax credits claimed in GSTR 3B that pops up from the data of GSTR 2B must be reconciled. So all the inputs that have been claimed in GSTR 3B must match with the books, or if there are certain differences, a reconciliation is a must. Then taxes paid and tax liability. The tax liability as declared in GSTR 3B return and as paid using the challans and input tax credit must match with the books. Any mismatch, especially turnover mismatch and ITC mismatch, invites notices from the department. So moving ahead, what are the common mistakes to avoid? Relying only on the books. So while preparing the final annual return, only data that is from books is not sufficient. Other documents like tax invoices, e-way bill, e-invoices and other such documents must also be considered by preparing the reconciliation and finally uploading the annual return, that is GSTR 9. Then incorrect ITC reporting. Incorrect ITC reporting leads to mismatches and ultimately invites notices from the department. So any incorrect ITC claims or ineligible ITC claims must be reversed during the year, or if it has not been reversed during the year, then it must be adjusted in the annual return. Then wrong table usage. Proper table must be used to declare the data in the GSTR 9 return. Then missing amendments. The amendment fields in the monthly or quarterly GST returns must be considered while preparing the GSTR 9 return. Data appearing in the amendment fields must be considered at the time of reconciling the data for annual return. Then ignoring GSTR 2A 2B data. Reconciliations for GSTR 9 should not be made solely from the books of accounts. The invoices that are appearing in GSTR 2B must be considered while preparing any reconciliation and differences between the books and the input tax credit that has been availed in GSTR 3B. Moving ahead, what are the tips for easy filing? Start preparation early. The taxpayers are advised not to wait for the last moment to start preparing for the GSTR 9, that is the annual return. Timely reconciliation and filing of GSTR 9 is an essential statutory compliance. Then use GST offline utility tool. It is always advisable to use the offline utility tools available at the GST portal or third-party software to validate the GST data and also to reconcile the books and the data as filed in the monthly or quarterly returns. Then don't adjust values in GSTR 9. Any new claims or new adjustments are not allowed in GSTR 9, so it must be avoided. Match GSTR 1 and 3B with books. So the books of accounts must match with the GSTR 1 and GSTR 3B, and any differences must be reconciled before the filing of annual return. The turnover declared and the corresponding taxes paid as per GSTR 3B and GSTR 1 must be in sync with the books of accounts. Then filing of GSTR 9 is optional for those whose tax start. Then filing of GSTR 9 is optional for those whose turnover has not exceeded rupees 2 crores during the preceding financial year. So to summarize, GSTR 9 is an annual compliance requirement for all the regular taxpayers whose turnover has exceeded rupees 2 crores during the preceding financial year. Then it is based on the monthly or quarterly filings, that is the returns GSTR 1 and GSTR 3B as filed by the taxpayer during the previous financial year forms the basis of GSTR 9 return. Then it ensures accuracy of GST records. So ultimately GSTR 9 validates the filings done on a monthly or quarterly basis by validating the yearly data in the GSTR 9 return. So before we conclude with today's session, let us quickly see a live example of a GSTR 9 annual return. Here we have logged into our GST account. We have to go to returns, annual returns. Here we have to select for the financial year 23-24. We have already filed the annual return. So let us see the annual return. Here are the different tables: table 4, table 5, table 6, table 7, table 8, table 9, then table 10, 11, 12 and 13, then 14, 15, 16, 17 and 18, and finally the table 19. So these tables are required to be filled up in GSTR 9. Each table contains different details. Like table 4 contains details of advances, inward and outward supplies made during the financial year on which tax is payable. So let us see here. There are many details that are required to be filled up in the inward and outward supply details. Like supplies made to unregistered person, B2C sales, then supplies made to registered person, B2B sales. We have reported this. Then zero rated supplies, supplies to SEZ, deemed export, advance on which tax has been paid but invoice has not been issued. There are multiple disclosure requirements that are required to be made in this table. Credit notes in respect of transactions specified in B to E above, then debit notes, and so on. So finally, since we have only one data that was required from our end, we have filled up this data. So supplies and advances on which tax is to be paid. This was the amount on which tax is to be paid during the financial year. Then details of outward supplies made during the financial year on which tax is not payable, that is exempt, nil rated or zero rated. In this we have declared nil rated 1174,2643, that is 11 crores 74 lakhs 26,000 and 431 rupees, right? Similarly, any other non-GST supplies are required to be declared here. Then details of ITC availed during the financial year. These are the input tax credits we have availed during the financial year. These inputs are required to be bifurcated under inputs, capital goods and input services. So we have availed only inputs against input services. So here also multiple disclosures are required to be made, like inward supplies other than imports and inward supplies liable to reverse charge but includes services received from SEZ. Similarly, inward supplies received from unregistered person liable to reverse charge, and so on. There are many details that are required to be filled up. In our case, only one detail is required and we have already filled up that detail. So total ITC availed during the financial year was under IGST it is 900, under CGST and SGST it is 35,684 rupees 32 paisa. Then again we will go back. Details of ITC reversed and ineligible ITC for the financial year. In this we have to declare the reversal of input tax credits. As per rule 42 we have reversed 10,015 rupees, 10,015 rupees, and these are ineligible inputs 25,669, 25,669 and 900 rupees. So ultimately net ITC available for utilization is nil across all. Then we have to declare other ITC related information like ITC as per 2B, this data will auto populated from GSTR 2B. ITC as per sum total of 6B of, that is this pertains to previous table. So there is a difference of 4339.75, 4339.75 between the data that has been populated from GSTR 2B and that has been disclosed in GSTR 3B by the taxpayer. So this difference, we need not do anything. ITC available but ineligible. These ITC were available to us but were ineligible, and hence total ITC to be lapsed in the current financial year is the same amount. So ultimately the remaining input tax credit that was not availed by us will be lapsed in the annual return. Next we have details of tax paid as declared in return field during the financial year. This was the integrated tax payable and which has been paid by us. So here we can see the difference. The tax payable was rupees 84,521.88 but rupees 75,937 has only been paid during the year. Along with this, the interest figure is 1165 and 5 rupees has already been paid towards interest. So the differential amount of this tax payable and tax paid and interest payable and interest paid shall be paid through DRC 03 challan, that is meant for voluntary payment of taxes. So here we can see the differential amount has been paid using DRC-03 challan. Here, this was the difference 8585 towards tax amount and 1160 towards the interest amount. This has been paid using DRC-03 challan. So moving ahead, let's again go back. Then table 10. In table 10, particulars of transactions for financial year declared in returns of the next financial year till the specified period, that is till the date of filing of annual return. There were no data that was reported in the subsequent return after the end of financial year. So it's coming as nil. Then differential tax paid on account of declaration in table 10 and 11. So 10 and 11 pertains to this. There were no such data. Particulars of demand and refunds, no demand or refund raised during the year. Then supplies received from composition taxpayers, deemed supply by job worker and goods sent on approval basis. Again, no information. HSN-wise summary of outward supplies. We have made the HSN-wise summary of all the outward supplies during the year. Here we have HSN code, description, quantity, unit of the quantity, then total quantity, taxable value. Is supply applicable for concessional rate of tax? No. Rate of tax, integrated, central, state, cess, and finally the actions, which is not allowed to be taken. Then in table 18, HSN-wise summary of inward supplies. We have not filled any detail here. And late fee payable and paid. Again, no detail. So this is the annual return structure and format and the different tables that are required to be filled and finally uploaded by the taxpayer. So that's it for today's session. Thank you.